Sure. But I requested you for the previous webinar videos, no?
Oh yeah, right. You wanted an Excel file with all the links, right?
And preferably not in the YouTube.
Okay, like
Because YouTube, I'm unable to download it. It
understood,
comes
understood.
only on the YouTube. That's the problem.
Okay, sir, got it. I'll do something and share it to you. No
Yeah,
worries.
yeah. No problem. Yeah.
Okay, so we are live,
Thanks.
sir. Very good afternoon, everyone. I hope my voice is audible. You can give me a quick yes or no in chat. Thank you. Very good evening, everyone. I hope my voice is audible. All right. Okay, so, okay, thank you. Yeah, good evening, Ms. Sucharita. Mr. Abuzar, good evening. Mr. Ravindra, good evening. Yeah, so we'll be starting off shortly. I'm just waiting for more of the audience to join in. All right, for the ones who've joined just now, very good evening. I hope my voice is loud and clear. Audience, what I'm going to do is, since I am going to make you guys wait a little longer, since a few more of the audience, once they join in, we can get started. So until then, what I'd like to quickly check with all of you is, what is it that you're expecting from today's session? Well, the topic, aside the topic being, okay, Mr. Abuzar says audio is low. Okay, is it audible now? I hope it's better now. It should be better now. Okay, great. Yeah. So, as I was saying, I would like to see what is it that you're expecting from today's session. What do you think will be covered by our speaker, Mr. Akela, today? You can use the chat in the meantime so that we will know what kind of inputs that you are expecting from today's session, based on which we will also look at modulating a little bit of it. Okay, great. Okay, great. Good to see some responses already. Expecting to get clarity on RCM concepts. Okay, RCM on rent. All right. Import, Mr. Abuzar says. Okay. And audience, I'd also like to mention that today's webinar, we will also have an exclusive Q&A for those of you who've attended our webinars prior to this. I'm sure you're aware that we give a lot of focus on our Q&A sessions, so we'll be taking care of that as well. So let the Q&A, you can use the Q&A tab in the meantime in the chat. Request all of you to enter your questions, and we will take that up as the session goes forward. Thank you. All right, good to see some more responses. Ms. Savita says, can we claim RCM input on transport of goods through porter if paid at 5%? Okay. RCM pertains to previous year, ITC, that is. Good evening, Mr. Kamal. Good to see you again. Mr. Sachin Jindal, RCM practicals. Okay. Ms. Lakshmi, RCM on import and membership charges. Okay. Ms. Hasim, I hope you're able to hear me now. I was on mute. All right. We'll get started in exactly 5 minutes. Okay. I think the most basic question that I can ask at the moment is, how many of you here are actually aware of the term RCM? How clear are you in terms of the concept RCM? That is something that I will put forward. Okay, I see someone had raised their hand. All right, we have an input from Mr. Charita. Reverse charge mechanism, just a minute. Okay, reverse charge mechanism and GST is payable by the service recipient. Okay. All right, okay. Really good to see the queries. I would like to see the same level of engagement as the session goes forward. We will keep the session really interactive. Once again, thank you all for your time and patience at the moment. We'll be starting off in exactly 2 minutes. Audience, I hope my voice is loud and clear. Just wanted to confirm because a few of them mentioned that it is low. And if I remember, someone had mentioned slow also. Okay, great. Okay. Yeah, yeah. Thank you. All right, wonderful. Thank you so much for your confirmation. All right, audience, let's get started. I hope my screen is visible to you all. All right. So very good evening to one and all present here. As you know, this is in fact our first webinar for the year, and we will be going on forward with a lot of webinars in the coming months. So let's get started. So obviously, I'm sure all of you are aware of what we're going to cover today. That is, we're going to dive deep into the concepts of reverse charge mechanism, and our speaker will obviously try and make it simple for you guys to understand right from the derivative, that is the history of RCM, and uh, the various things under RCM today. And I think something that I really want to mention is we have a dedicated Q&A session as a session moves forward. So request all of you to put down your queries, any kind of questions that you have on Q&A or chat. We will take that up as the session goes forward. Let me introduce myself. I am Siddharth Nandakumar. I handle product marketing at the company I represent, that is Websol, and I will be your moderator for the day. So let's move forward. Audience, just let me know if the screen is visible. Confirmation would be great so that I can go forward. All right. Okay. Thank you. So before we go forward, I would like to quickly talk about the company that I represent, followed by which I will obviously introduce our speaker and hand it over to him. So we are Websol. We have in fact we are in fact we were in fact part of Wipro's domestic IT business back in the 1980s. So we were the printers peripherals manufacturing division of the company. So what this means is in terms of your printers, your toners, cartridges, and other electronic uh, hardware is something that we were specialized in. And from there on, the company evolved, and over time, the company decided to come out of Wipro and form a separate company in the name of Wipro e-Peripherals, which later on moved on to be known as Web Solutions. Over the years, we have obviously perfected our printing business, and from there on, in the year 2017, we introduced a range of digital workplace services. Now, under this, we have a very crucial service, which I believe all of you today, the audience, can relate to, is a GST solution for filing, reconciliation, and e-invoicing. So we have a solution that takes care of all of that as well. More on that as we move forward. And in the recent years, last year we actually underwent a complete rebrand exercise, an absolute refresh, and we are known by the name Websol today. So we have a complete different offering in order to facilitate fluidic workplace, the concept itself. And by the name of fluidic workplace, we also have a completely refreshed lineup of workplace suite services. So more on that as we move forward. All right. Quick highlights about our company. We come with over 23 years of industry experience, and we have close to 560 enterprise customers. We're present in 2000 plus service locations across the country, and we've deployed more than 1 lakh devices. We also won the Company of the Year award in 2022 by CIO Tech Outlook Review for our DMS solution, that is document management solution. And a quick view of some of our customers down. Moving on. Now, this is our intelligent workplace suite for businesses, organizations. It goes by the name FluidWorks. What this essentially means is our solutions will be able to give you a fluidic approach. What that means is we'll be able to build you a rather scalable and tailored solution based on your requirement. And now under this we have an umbrella of offerings by the name of Fluid again. So more on that as we move forward. Let me quickly explain each of you. As you can see here, we have Fluid Pro, Fluid Print, Fluid Map, and Fluid Trade. Let me move forward. All right. So FluidWorks, as I mentioned, is our intelligent workplace suite under which we have multiple solutions. Fluid Pro, which is our managed IT infrastructure service solution. Now, what this means is in terms of your, let's say you need to set up a data center in your workplace, take care of your servers, your Wi-Fi access points, and your entire network suite. That is something that we take care of. We'll be able to plan and chalk out your entire infrastructure requirement, and based on that, we'll be able to deploy the hardware and the tools required to monitor that on a 24/7 basis. We also have a dedicated NOC support system, which is 24/7 as well. So that is Fluid Pro. What is Fluid Print? This is our signature offering. Managed print services. What this means is we deploy printers on a CAPEX or an OPEX model based on your requirement, and we will charge you on a per print basis and not for the printers. We are also number one in India on this part. What is Fluid Map? Now, in order to
manage all these printers and your any other IT assets that are present in your company deployed by us, you also need a tool, right? You need a tool which can monitor all of this remotely from a specific location, or assume that there is a master remote requirement. So this is something that is taken care by deploying Fluid Map, our IT asset management service solution. Now, what this means is we deploy a tool in your network, and you'll be able to monitor all your IT assets that are deployed in different locations of the country or even your workplace. So it will monitor your uptime, downtime of various hardware. You can also check your printer toner level, cartridge level. All of this is taken care by Fluid Map. And Fluid Trail is our workflow automation and document management solution. Under this, we have different use cases for various teams, like the HR team for employee records management. We have procure to pay for procurement, and DMS, you can just store documents on the cloud on the go. Now, I will not be explaining the products end for the retail. What I would like to quickly explain before I move forward is our flow tax, our managed GST solution. This is a one-stop solution for all things GST in terms of filing, reconciliation, your e-waybill automation, your e-invoicing. All of this is taken care by one solution, that is Flowtax. We also are a GSP that is appointed by the government itself, GST Suvidha provider. And our solution also takes care of integrations. For example, your SAP, Oracle, Microsoft Dynamics, NetSuite, so on and so forth. Any custom API integrations is something that we take care of. So that is Flowtax for you. And as I mentioned, I will not explain the products in. I would just like to quickly give you a gist that we are present on the retail end, and we offer POS machines, your touchscreen billing machines that you see in Kirana stores, supermarkets, jewelry stores, all of that. So that is what the portfolio of our solutions is. So thank you so much for your patience. That is a quick introduction about our company and the portfolio. Now, there will not be a demo or anything as such in this webinar, but what I'd like to quickly understand, if is there anyone from our audience end who would be interested to see a free demo of our GST solution if you're exploring or something for the coming quarter or the next financial year. That is something that I'd like to know. We'll be able to arrange a free demo for you. So I hope you're able to see this poll on your screen. Would you be interested in a free demo of a solution? Flowtax. I will leave this poll on for the next 1 minute and take it down. Audience, I'd like to mention that based on your availability and your requirement, we would like to understand what exactly you're looking for, and we'll be able to arrange a free demo of our GST solution based on your availability in the next 1 or 2 weeks. All right. I also see a bunch of questions that have been already put up on the Q&A tab. Please keep it coming. We will definitely keep a track of it and answer it as the session goes forward. Mr. Ashok, I think you had raised your hand. Let me know if there's any way I can help you. All right. Thank you so much for your inputs. I'm ending the poll. So those of you who've shown interest, our team will reach out to you in the next 2 to 3 working days. Okay, Mr. Anirudh, I've noted down. I've noted down your query on chat. Yeah. All right. Let us move forward without any further ado. I would like to introduce our speaker for the day, Mr. Akela Prakasa Rao. A quick introduction about him. Mr. Akela is an independent indirect tax advocate. He graduated from BITS Pilani in the year 1989 in electrical and electronics engineering. He is also a gold medal holder who completed LLB from Andhra University in the year 2001. Mr. Akela is a certified fraud examiner as well, but currently not active. He worked in CBIC, that is Central Board of Indirect Taxes and Customs, from the year 1994 to 2008. He's worked for BSR and Co., that is KPMG, Bangalore, from 2008 to 2013. His major stints were with Toyota Kirloskar Motor Bidadi from the years 2013 to 2016, and his last stint was Biocon from the year 2016 to 2021. He's also a member of various indirect tax committees of trade bodies, to name a few, like BCCI, CII, FICCI, and so on. He's also written articles in TIOL, Tax Sutra, on various tax issues. Mr. Akela, aside doing webinars with us on a regular basis, he is also a speaker and panelist on various other forums addressing indirect tax matters. He comes with more than 28 years of experience in the field of indirect taxes, with exposure in government, consultancy, and industries, to name a few, like auto and pharma. He's currently practicing as an indirect tax advocate, assisting a large number of clients on all aspects of indirect taxes at all levels. I take great pleasure in introducing him on yet another webinar with us. I have, in fact, lost count with the number of webinars we've been doing with him. So I'm sure the audience is looking forward to directly hearing from you, sir. Mr. Akela, over to you. Thank you.
Thanks, Siddharth. Thanks for those nice introduction. And I think this could be our Silver Jubilee webinar. Could be the 25th one, which I'm doing it for WebSolve. Okay, statistics apart, thanks for all the people who have joined me today for this session. That I could see more than 50 participants out of roughly 170 people who have registered. So it shows that still the subject is having some issues. So I think that we should be clarifying all those doubts. Hence, I will be going little in detail only, but most of the time that I would like to keep it aside for the Q&A session, because I don't want anybody to have any kind of a doubts about the reverse charge mechanism going forward, because more or less all the issues under the reverse charge mechanism were settled either by way of jurisprudence that has developed or by way of clarifications issued by the CBEC and the GST Council on several occasions. But still, if there are doubts lingering in the trade, then that is not a good sign. So I think that this session should address all such queries, at least for the participants who are there here today. So I would like all the participants to post their queries in the Q&A box. And if there are any queries which have come in the chat box already, that we will be definitely addressing them. But my humble request to all of you is that you please place your queries in the Q&A box, so that at the end of the session that I will be devoting time on it. And those who want to interact with me directly can also do that at the end of the session. But on to the agenda. So a little bit of history I'll be touching upon, and then how in the previous regimes the RCM was levied and how it has flowed into the GST, and what are the kind of compliances and confusions we have, and what are the latest developments in the GST. These are the couple of things that I will be touching upon. This is actually a repeat webinar for us, because that on the RCM, that I think somewhere in the month of August 2023 we have covered one session, but nevertheless we thought that it will be relevant for the people to again touch upon this subject. So the next slide, please. Yeah. So a German businessman, W.V. Siemens, and an American economist, Thomas S. Adams, first thought of the concept of value-added tax to curb the cascading effect of the indirect taxes, and which aimed at an efficient system based on consumption at the destination. So the destination base mandates that the exporting country cannot charge the VAT on its exports, so that the destination of the consumption can charge its own VAT on the last sale to the consumer. That's how the VAT regime and the destination-based concept were evolved in the past. Next slide, please. So, origin-based taxation, on the other hand, ensures that the consumers in different countries are on a level playing field, and scamsters are aware that exports have to be zero-rated, since taxation under the VAT is destination-based. Hence, the concept of destination-based taxation, while ensuring fairness and competition to all the producers located outside the jurisdiction, worked in favor of the scamsters. And that is where that they thought about the reverse charge mechanism in the year 1993. The tax was to be deposited by the importer himself with the customs authorities before the goods release, thus compelling the importer to comply with the law in order to get a set off of the taxes so paid by him under the reverse charge mechanism at the first point itself. So this is what is the evolution of the reverse charge mechanism in the taxation laws, the two indirect taxes. Next slide, please. So the central government has introduced a system of tax collections at verifiable sources rather than through an unverifiable sources under the income tax law. So that is the concept of TDS. So the system was successful enough to contribute to the foundations of reverse charge mechanism in other tax fields also. So the concept of RCM existed in the previous regime of excise law also, wherein the importers were used to pay the import duties under reverse charge mechanism as if he were the manufacturer of the imported goods, and but the credit used to be given to them so that it will be cost neutral, but definitely will give the tracking for the government. So the RCM and import duty served the dual purpose of curbing the carousel fraud as well as ensuring the domestic equity. So that's how the RCM mechanism has been justified by the lawmakers. Next slide, please. So, Wide Finance Act 1996, the legislation sought to cast the tax net much wider, and it amended certain provisions in the Finance Act, and thereafter rules which have originally been framed in 94 were also amended. And Section 68 1A in particular was introduced to initiate the concept of RCM on services. But in 1999, the Supreme Court in the case of Lagu Udyog Bharati has struck down this levy. So again, the law has been strengthened in 2004. Again, it resurfaced, but the matter drawn again to the Supreme Court in the matter of Gujarat Ambuja Cements. But the Supreme Court this time has upheld because the suitable amendments in the law were also made. So that's how the RCM started to be with us. Next slide, please. So the Finance Act 2012 has introduced the negative list in the service tax regime. So there is a new concept introduced in the RCM, that is a partial reverse charge, wherein that the service provider as well as the service recipient have got certain percentage of taxes to be paid respectively by them. So this is a partial reverse charge mechanism concept which was introduced in 2012 at the time of introduction of the negative list in the service tax regime. So notification 30 of 2012 read with the rule 21D of service tax rules has been amended from time to time to hold as many as 15 different services as the responsibility of the service receiver, even including the likes of companies and body corporates in respect of the services provided by their directors. So that's how the tax RCM has existed in the previous tax regimes. Next slide, please. The Finance Act 2015 added another dimension to this mechanism, and it substituted the words service receiver with the words person with other than the service receiver in notification 30 of 2012. So the idea now expanded from being a normal reverse charge to a most aggressive and most proactive way to collect the tax. This dimension was introduced to impose the service tax collections and responsibility on the aggregator. Aggregator is a concept which you normally come across in the e-commerce, wherein that he may not be the actual supplier of the goods or supplier of services, but he is the person who has a platform wherein the service provider and the service recipient can interact and the supplies can happen. So that is the role of an aggregator. So this aggregator in layman terms could be defined as a web-based intermediary. So like Uber cabs, the service provider is the car owner, while the actual recipient of it is the customer who travels in the cabs. But Uber, being the aggregator, is in a prime position to control the activities of both. Hence, it was a smart decision to put the responsibility of the service tax collected upon these aggregators. And for this reason, in 2015, that the definition of the service receiver was substituted by person other than the service receiver also. So this is also one of the very key changes that are made in the reverse charge mechanism concept. Next slide, please. So from 1st of July 2017, we could see that the GST was introduced. So in the GST, there are two classes of domestic reverse charge. The RCM, depending upon what the service is, the type of service based RCM, that is one way criteria. And this depends on the nature of supply and the nature of supplier. And RCM on supplies by unregistered persons supplying specified services is a two-way check, which was suspended mostly except for a few categories of services. This has not yet been levied as on date. And the taxation for the URD RCM, that is unregistered dealers reverse charge mechanism. That is 5,000 rupees per day has been provided by way of a notification. Utmost care should be taken while taking benefit under this notification, as exceeding the limit of 5,000 per day will trigger liability of full amount, including the first 5,000 rupees also. So these are the important changes that have come into the GST as far as RCM is concerned. So the RCM in the GST, the whole point is that you have to see what is the kind of a service and what is the kind of a supplier. So depending on that, the RCM has been defined under the GST law. And for the making payment under the RCM, you need to have a registration. So those who are having any supplies which attract RCM have to compulsorily take a registration for paying the tax under the reverse charge mechanism. A supplier cannot take ITC of GST paid on goods or services used to make supplies on which the recipient is liable to pay tax. So whenever the recipient is liable to pay the tax, the supplier cannot take ITC paid on the goods and services to make such supplies. And some queries have come whether self-invoicing is mandatory. Yes. Why self-invoicing is mandatory under the RCM is the invoice that you get indicating the consideration for the RCM services normally is not a GST compliant invoice. So such an invoice cannot be held as a document good for taking the credit also. So you need to generate a self invoice which is compliant with the GST laws and against which that you will be paying the RCM in cash, and such an invoice is going to be a valid document for you to avail the input credit of whatever the RCM that you have paid, subject to the eligibilities and other things. So what is the point that we need to take note of from this is self-invoice in an RCM scenario is a must, because that is the invoice which is going to be GST compliant. That is the point that I just wanted to highlight to you in this. Next slide, please.
Sir, just before you go forward, I'll just launch a couple polls if that's fine.
Yeah,
with you,
please,
sir.
please. Go ahead.
Okay, so audience, we have a bunch of polls that are coming up, but I would like to launch just one for the time being. Which of the following transactions is typically subject to GST under the reverse charge mechanism? There are four options: sale of exempted goods, import of goods, sale of goods within the same state, or intrastate supply of services. Leave this poll on for the next 1 minute, and I request majority of us to attempt the
Not
polls.
majority, in fact, everybody should attempt this.
Right.
Because the query has got a twist in it, but definitely that's something which is interesting.
Students, we have about 20 of them who've attempted. Okay, good. The numbers are going up.
No, we need more people to make an attempt on this.
Definitely. So we're at 29. Okay. That's a little less than half of the audience. Okay. Audience, can we have another 10 more responses? Okay. 9, 8, 7.
Be an active participant in the session, sir, which will help you and us also.
Okay. 6 more attempts and 6 more. Okay. Not bad, not bad. Okay. We just need 3 more. Then we'll wrap it up. Okay.
Please, some more participants, please give your vote. The question is not so complicated, but a small twist.
Okay. I think we can call it off, right, sir? We have 40 responses.
Yeah. Good work. So I just show you what is the kind of a responses that we have got. See, those who want to poll that, I think that it stopped. So I'm telling you, see, there are 4 options. Sale of exempted goods is not subjected to any kind of an RCM. And intrastate supplies are subjected to IGST. Sale of goods within the same state is subjected to CGST and SGST on the forward charge basis. Import of goods is a different kind of an area. So the importer, who is actually going to be the recipient of the goods, is going to pay the taxes. So in a parlance, it is called a reverse charge mechanism. But you cannot say the custom duties are paid under reverse charge mechanism, because the customs levy itself says that the person who is causing the crossing of the frontiers, that event of crossing of the frontiers, is the person who is liable to pay the tax. Hence, the importer who is causing these goods to cross the customs frontiers is the person who is supposed to pay the tax. So, if somebody wants to take it as a reverse charge mechanism, yes, but normally in the customs law, the definition itself is such. Hence, many people think that it may not be a reverse charge, but it is a kind of a reverse charge only. So import of goods is the right answer. I think
Yeah,
majority of the people
majority.
have got it right only.
Correct, sir. Majority of them have.
Thanks for your participation.
Okay. It's actually a good turnout, sir. We've had
Yes,
70% of them attending. Let's see if we
yes,
can get more next time. Yeah.
sure.
All right, audience, you can, we'll go to the next slide. We have a few more polls coming. Request all of you to attend that. Yeah, sir, you can go ahead.
Yeah. So, what are the complaints in respect to the supplies made under the reverse charge mechanism? That a couple of the touch points, what in the law that you have to see is the section 31 read with rule 46. Every tax invoice has to mention that the tax in respect to the supply on the invoice is payable under reverse charge mechanism. So, it is the responsibility of the service provider to indicate to the service recipient that you have an obligation to pay the tax under reverse charge mechanism on the face of his invoice. So you may have a question that if such an indication is not there, hence I missed paying the RCM, cannot be an excuse on your part. So as far as service provider is concerned, it is a good practice that he should indicate to the service recipient that this particular supply is subject to reverse charge mechanism. So to please take note of the same. But if he fails to do in his job, but definitely the service recipient, having failed to pay the RCM, cannot take a plea that he did not indicate it, hence I did not make the payment. Sorry, such a facility is not there. Similarly, this also needs to be mentioned in the receipt voucher as well as refund voucher if the tax is payable on the reverse charge mechanism. And maintenance of accounts by the registered persons, they are supposed to maintain the register for supplies attracting the payment of tax on reverse charge mechanism, and any amount payable under reverse charge shall be paid by debiting the electronic cash ledgers only. So this is what I told, that the reverse charge mechanism cannot be met through your electronic credit ledger, but it should always be paid in cash from your electronic cash ledger. So reverse charge liability cannot be discharged from your input tax credit. But after discharging the reverse charge liability, the same can be taken as a input credit. That facility is there. And then invoice level information in respect of all supplies attracting reverse charge rate wise are to be furnished separately in the table 4B of the GSTR1. And advance paid for reverse charge supplies is also leviable to the GST. So the person making advance payment has to pay the tax on the reverse charge mechanism. That is something one needs to keep it in mind. Next slide, please.
Sir, let me just launch one more poll. Just give me one moment.
Yeah.
So, audience, we have a couple more polls coming, but now this one is something where I request all of you to take about 15 to 20 seconds max to max. I'm just pasting a link on chat. Now, this is a live LinkedIn poll that's running on our social media handle on LinkedIn. So, request all of you to click on the link. This will directly take you to the poll on our social media handle, and answer that and come back as soon as you can so that we can get back with the session. Now, I will read the poll anyway, which is on the on our social media handle on LinkedIn. Now, what information do you think is crucial when determining whether a transaction is subject to reverse charge mechanism? Is it the nature of supply, threshold limit, type of recipient, or place of supply? Okay. All right. Mr. Palash says nature of supply already. So he may have actually given off the answer to a bunch of them also over here. So nevertheless, let's see how many responses we have got on LinkedIn at the moment.
Okay, we've got 10 votes already, which is great. Audience, request, I think the engagement has been great so far, and we'd like to keep this going. So request all of you to try and increase the number of votes. Okay, good. Okay. And I'd also like to mention on the side note that those of you who are interested to see a regular periodic number of GST related posts and updates, you can gladly follow us, and we have a constant number of updates and posts that come up on our page. All right. Okay. Yeah. Sir, we can go ahead. I'll just move to the next screen.
So I'm taking up what are the goods that are subjected to reverse charge mechanism first, because this is not a very big list, but mostly to do with agricultural produce like cashew nuts, not shelled or peeled, and then BD wrapper leaves, tobacco leaves, supply of lottery by the state, by the governments, and the silk yarn. These are the items which are subjected to RCM because these are agricultural produce basically. Next slide, please. Yeah, when it comes to services, that you have got a bunch of services. Any service supplied by any person who is located in a non-taxable territory to any person other than the non-taxable online recipient. This is what is subjected to reverse charge, which is import of services basically. Then GTA is subjected to reverse charge. And services supplied by an individual advocate, including a senior advocate. So all legal services. Services supplied by an arbitral tribunal to a business entity. So that is subjected to reverse charge. Services provided by sponsorship services, which is also there in the erstwhile service tax regime also. Next slide, please. Yeah. Services supplied by the central government, state government in union territory to a business entity, excluding is important word, that other than these services, on all other services, reverse charge will apply. So there is a query in the Q&A box also, like what all the services rendered by the government are subjected to RCM. So other than renting of movable property services and the services specific rendered by the Department of Posts by way of speed post, express parcel post, LIC, agency services provided to a person other than the central government or state, etc. And services in relation to an aircraft or a vessel inside or outside the precincts of a port or an airport, and transportation of goods or passengers by the central or state or union territories. Other than these, on all other services received from the government, you have an RCM liability. I think I'm clear that that will answer one of the queries in the Q&A box. And then services supplied by a director of a company or a body corporate to the said company or the body corporate. On this, that there was a clarification issued recently by the GST Council also, that a director being an employee of the organization, if he renders any services for which he receives the payment, that is not the one which is subjected to RCM. But in his personal capacity, if he is rendering any kind of a services which are not mandated to be provided by him as per his employment relationship with the company, then all such services that RCM will be applied. I'll tell you an example, that there is a doctor who is there as a board of directors in a company like Infosys. So he being a active director in the on the Infosys board, that whatever that he gets as a salary, being an employee of the Infosys or being the director, that sitting fee, other things and all, that may not be subjected to RCM. But in his capacity as a doctor, if he is rendering any kind of a services, again, doctor providing healthcare services is exempt. That is some logic. But say, for example, he is not a doctor, he is a professional architect, and he is rendering some services for doing some kind of a landscaping services in that IT company. In such a scenario, whether the RCM is applicable, yes, the RCM is applicable for such kind of services. So it is not part of his employment with which the organization that when he is rendering services and receiving the salary, that is subject to tax. But in his personal capacity, when he is rendering some services to the organization, so this mostly happens from the independent directors who are there on the boards of the companies. So there that RCM is going to be applicable. So that is what is the clarification that has been issued very recently. And services supplied by an insurance agent to any person carrying on the insurance business. So same line of business, then RCM is applicable. And services supplied by a recovery agent to a banking company or a financial institution or a NBFC. That is where that the RCM is going to be applicable. Next slide, please. So, supply of services by an author, music composer, photographer, artist, or the like, by way of transfer of permitting the use or enjoyment of a copyrighted item covered under the Copyright Act relating to the original literary, dramatic, musical, or artistic works to a publisher, music company, producer, or the like, is subjected to reverse charge. And similarly, the services supplied by a person located in a non-taxable territory by way of transportation of goods by a vessel from a place outside India up to the customs station of clearance, that is ocean freight, is having a reverse charge obligation. So then next slide, please. I think these are the entire gamut of services on which the reverse charge is going to be applicable. So there are a couple of goods which are basically of agricultural nature, and then there are a couple of services which we have now discussed on which reverse charge is going to be applicable. One thing we need to keep it in mind while going through the history of the reverse charge mechanism, how that it came into the indirect taxes and how we traveled to the GST, we have touched upon certain concepts like partial reverse charge and then the reverse charge which is paid by both the service provider and the service recipient. So such a kind of a partial reverse charge mechanism is not there in the GST at all. So if it is a reverse charge, the entire 100% of the tax burden is on the service recipient only. No part of the service on which a certain percentage need not be paid by the service provider at all. If it is a reverse charge, then reverse charge is always payable by the recipient. That is one important thing we need to keep it in mind. The rate of tax to be used is the rate which is applicable to such goods or services. And the compensation cess is also, if it is applicable, then under reverse charge, even you have to pay that also. If the goods and services purchased in the exempted or nil rated, then no tax is payable under the RCM. And composition dealers are also required to pay the reverse charge at the normal rates and not at the composition rate. So what we need to keep it in mind is, being a composition dealer, if he is receiving any kind of a services from an advocate, on which that he is supposed to pay the reverse charge at 18%. But even though his composition rate is 1 or 5, but his reverse charge obligation will be at 18% only. So these are a couple of important points that we should not be losing sight of. That is the reason I am just summarizing those important key points that you need to take care of. Next slide, please. Yeah, any amount of tax paid as a reverse charge is allowed as an input credit, and of course subject to the other conditions, like some people are not supposed to avail any kind of an input credit, those in the hotel industry. So they have to charge 5% irrespective of whatever maybe the item that they are offering to the customer. So those are barred from taking any kind of an input credit. So in such a scenario, if they have received any services under which are applicable for reverse charge, then they are supposed to pay the tax, but they cannot avail the input credit. So whatever conditions that apply to the person, the taxable person, will be applicable. But in the normal circumstances, for majority of the transactions, if reverse charge is paid, then ITC is readily available. Also, amount of GST should always be paid in cash and not from the ITC. And then advance paid is also subject to tax, and the person making advance payment has to pay the tax on reverse charge basis has been postponed detail. And the registration requirement, I told you that anybody should have a registration for paying the RCM. Next slide, please. So the time of supply is one other key important thing, because some of the queries that I have seen in the chat and Q&A boxes are going to be answered here. So for the levy of the reverse charge mechanism, that they have told which is the earliest point of a time. So it is important to assign the time of supply, as GST would be required to be deposited with the government within 20 days from the end of the month, because GSTR 3B will be filed on subsequent month and 20th. So the time of supply in case of supply of goods will be earliest point of date of receipt of the goods, or the date of payment, or the date immediately after 30 days from the date of issue of invoice. These are the three times. If it is not possible to determine the time of supply as per the ABC above, the time of supply should be the date of entry in the books of accounts of the recipient. So the important point that is to be noted here is date of entry in the books of accounts. Similarly, in the case of services, time of supply would be the earliest of the following: date of payment, or date immediately after 60 days from the date of issue of invoice by the supplier. And if it is not possible, the time of supply will be the date of entry in the books of accounts of the recipient. So in these cases, the important point to be noted is the date of entry in the books of accounts. So there is a queryist who had asked a question that they want to pay the RCM liability pertaining to year 1819, whether it is possible, and on such payment, whether they are entitled for the ITC. This is the question that they have posed. So for it to answer, see, in the 1819, if you have received the invoice on which RCM is applicable, and you have already recorded that entry in the books, then if you are going to pay for it in the year 24, then definitely it goes without saying that you have to pay it with applicable interest, and then you will have a problem of taking that input credit, because the officials are going to definitely question you. So if it is not recorded in the books and now you are going to take it in the books, but the activity pertains to the financial year 1819, but it is going to appear in your books in this year 23-24, then you can pay it under RCM now, and there is no need for you to pay any interest also, and you can take credit, because this is the first occasion when you are recording that transaction or the expense in your books. Hence, from now only the liability will start. Hence, for the past period, interest also need not be paid. So that would be the justification for it. But you have to establish on record that why this particular expense relating to 1819 has missed your attention, and now it is being taken up for discussions for making payments and all. So that proof, recorded thing, should be there available, because if the amount is not significant, no issues. But if it is an amount significant, then definitely the cross-examination by the department during their investigations or audits, it will come up and it will lead to demands. So you have to be very careful in establishing that why at all it missed your attention in the year 1819, when the actual expense has happened, but it was not recorded in the books. Now only you are recording, now only you are paying it, and then you are subsequently taking the input credit thereon. So take care of that particular point so that you can pay. But however, if it is already recorded in the past, then it goes without saying that you have to pay it along with applicable interest. No mincing of words. Interest is going to be a cost to company, but you have to bear with it. Yeah. Next slide, please.
Yeah. Sir, let me just launch one more poll.
Yeah, please.
Okay. All right. I think this could be the last poll. Which aspect of RCM do you find most challenging? Is it identifying applicable transactions, calculating the tax liability, or filing RCM related returns, or maintaining the accurate records? I'll leave this poll on for the next 1 minute, and I'd like to see if we can get even more responses than our last two polls. Okay, that is pretty fast. We already got 30 responses. Okay, great. 36. Can we have 10 more responses? Also, those of you who have mentioned your queries on chat and Q&A, we will take them up. I think we are almost nearing the end of our slides, so we will get into the queries right after that. Okay, audience, can I have just, okay, yeah, I think let me end the poll. Okay, and I'll just share the results so that, sir, if you'd like to mention any comments on this.
Yeah, the majority of the people have identified correctly that what is the applicable transaction on which the reverse charge is to be paid is very important. In that context only, I made a mention that the supplier, either being a service provider or the supplier of the goods, has to indicate on the face of his invoice that this transaction is subject to reverse charge mechanism. That will be a good indicator. But if the person is did not indicate it, then the service recipient cannot he cannot take a plea that since it was not indicated as an RCM and all, that I did not make the payment. Such an excuse is not going to be acceptable for the department. But however, yes, the tricky part is to identify the applicable transaction, because calculating the tax liability, filing the returns, or maintaining the records may not be such a big difficulty, but definitely identifying the right transaction is going to be the important thing. It is a good response by majority of the people. We'll go ahead.
Yeah, I'll just stop sharing and move to the next slide. Yeah, sir.
Yeah. So whether any time limit applies for the payment of RCM. So RCM has to be discharged by generating the self invoice. This is where I told that recording the expense in the books is going to be a very important event for you. So the minute you record it, then your liability starts. So what is the time limit? That in case if you have any kind of a dispute about the transaction, my sincere request is don't ever record the transaction till the controversy settles, and then you are in a position to decide whether you need to pay it and then the RCM thereon. But if it is not, then better not record it, because the minute you record it and do not discharge your RCM liability, then you are liable for interest and consequent consequences. If there is any delay in generating the self-invoice and payment of RCM, will there be penal interest? Obvious answer is yes. Whether ITC is claimable in the same month or in the subsequent month is another big question by many people. See, theoretically, there is no bar that you have to wait for the next month. You can claim it in the same month. But the biggest problem is it is a payment in cash and again availing it in the electronic credit ledger. So in the same 3B, when you are showing these two entries, it creates a bit of confusion for you. But if you are very clear while doing your compliances and are in a position to justify during the audit to the departmental authorities, absolutely there is no bar that the RCM can be paid in the same month and can be availed as an ITC in the same month. But otherwise, the best course would be to pay it in 1 month and take it in the subsequent month. Yeah. The next slide, please. If RCM is not paid by the recipient, whether supplier is responsible, absolutely the supplier is not responsible. That is where I told very clear. The supplier's obligation is to indicate on his supply invoice, but if he fails to do it also, then supplier cannot be held responsible. And whether a director giving services to the company has a rental income also and is exceeding the SSI threshold limit in terms of his total turnover, whether registration under the GST is mandated. The answer is yes, because the total turnover includes everything under the GST definition. Hence, he needs to take a registration. Whether RCM can be paid in installments, I am afraid that the answer is no. Yeah. But if the supplier himself gives the invoice in installments because of the agreement, then as per the installments, that even the RCM liability also will be there. But in one go, if you get an invoice, then the RCM cannot be paid in installments. That is the whole point that one needs to keep in mind. Next slide, please. So other than RCM, some of the important decisions are the developments that I just wanted to bring it to your notice, that there was a move by the GSTN that e-way bill can be generated only and only against an e-invoice for the B2B and B2E transactions, but for reasons best known to them, that the same has been withdrawn by the GSTN immediately after announcing. So, but definitely it is something which is going to come up in shortly in the coming days. So one should be ready that you can generate a e-way bill only and only when you have taken the e-invoice of the invoice generated by you. Invoice, e-invoice, e-way bill. That is the sequence you have to follow. And then there is a big hue and cry about the show cause notices being issued for the financial year 17-18, which has happened before the September 30th of 2023. And the adjudication orders were passed in most of the cases till 31st of December 2023. And then for 18-19, the officers are supposed to issue all the demand notices on or before 31st of December. But fortunately, because of the intervention by the government again, that it has been extended by one more month. But of course, the bigger question is several of the high courts are seized of the matter that whether such a kind of an extension, which was envisaged in the law only for the reasons of force majeure, can be invoked by the government time and again, and whether the limitation period can be extended by way of notifications by the government is something which has been questioned in several of the high courts, and all the matters are currently not yet decided. So the writs got admitted. But the other logic which is being given by some of the experts is that the Supreme Court itself has given some 20 months period as an exempted period for issuing any kind of a demands or for filing a refunds and all due to corona, which is a force majeure event only. So if you take that period into consideration, then what all extensions the government is seeking are falling within the purview of the law only. Hence, I don't think that there is going to be any kind of a adverse decision which can be celebrated by the SSCs, which may come up from any of the high courts. But if some high court interprets in a very differently and can overcome the Supreme Court directions on that period also, and if some decision comes, maybe it is a celebratory time, but definitely it may not be the end of the litigation. That matters might have to travel to Supreme Court also. So this is some interesting development which we need to watch from the judicial forum. And a clarification is in the offering on the applicability of the valuation rules for gaming, whether they are retrospective or a prospective. That is a debate which is happening. Of course, that there is 1.6 lakh crores of tax demands were made on this gaming sector so far by the DGGA and other formations across India. But in all these matters, that unfortunately from 1st of October 2023 only, the valuation rules for the gaming industry were announced. So the Revenue Secretary has gone on record saying that this is going to be a prospective legislation. But unfortunately, the department's view is that from 1st of July 2017, that it is going to be applicable. However, since the matter is sub judice across several courts, including the Supreme Court in the matter of Gamescraft decided by the Karnataka High Court. So the clarification from the GST and Council is expected. Maybe the next council meeting after the budget may clarify this position for us. So we got to see. So another important event that we all will be eagerly waiting for all these past years is the budget day. Now the budget is going to be presented on 1st of February. That we have changed the date from the 28th or 29th of February to the 1st of February now. So now the 1st of February, the budget is not going to touch upon many aspects of the GST, but definitely it is going to be more to do with the other laws like foreign trade policy and income tax, and then some part of central excise levies and all that. But if there are some amendments which are to be made into law, all such amendments in the GST law also will be moved by the government in respect of CGST and SGST laws, because the IGST laws, because SGST laws are to be amended by the respective state governments during their budgets and all that. But definitely the 1st of February 2024 is going to be something interesting for us, because for two reasons. One, that it may not throw up too many surprises, but definitely it is a election year budget and it is going to be an interim budget, but something which we need to wait and watch what is in the offering for us. So with these words, I think that I have come to the end of my presentation and I will be moving on to the Q&A session. So I again request all the people that who have got their queries and all to post their queries in the Q&A box so that I will be going through them. So first I am touching upon the chat box if there are
Yeah.
any queries that I will complete and then I will move to the Q&A.
Okay. I think we can go from the very top, sir. But let me just see from where that is.
Expecting clarity on the RCM concept. I think enough
Yeah.
clarity must have been there now.
Sir,
So if there is
yeah.
anything, any area that is still under confusion, I urge you to please pose your query so that I will be happy to clarify that.
Yeah, so just 1 minute. So those are actually before the webinar started. So we can start from Ms. Lakshmi's question. That is, we have one of our branch GST registration cancelled. That one, sir. Timestamp is 4:28 p.m. I think from there we can start.
We have our one of our branch GST registrations is cancelled due to the branch closed in 2019. Now they have passed the order for 1718 saying that we have to pay some liability. GSTR 1 liability is more than the 3B. However, we have mentioned in we have mentioned in our annual return and reply to the earlier notice again, they have passed the order. Please advise. See, though you have closed the branch in 2019, since you have operations in 1718, the last date for passing the orders for the period 1718 happens to be 31st of December, that they must have given you the order. Now you are making an allegation that a GSTR 1 liability is more than 3B. However, we have mentioned in annual return, replied to the earlier notice again, they have passed the order, you are saying. I am unable to understand if for the same period there are two orders. But even if there are two orders also, we got to see what is the materiality of it. And second thing is, when GSTR 1 liability is more than the 3B, what you have discharged, then even though you have made a mention in the annual returns, whether you have paid the taxes applicable on them with applicable interest or not, that you did not mention. But definitely, litigation is something which cannot be discussed just in a call. So if you really want any kind of a support in this, you can reach out to me offline, that I will be able to help you on this.
Yeah. So, audience, I think in the post-webinar mailer, you'll receive our presentation and Mr. Akela sir's contact, like in terms of the mail. So you can reach out to him over mail right after that.
So, and from Lakshmi only, that there is one more query, that RCM is applicable for import of services. We are in logistics services. Our agent outside India will provide the service. So when you are receiving the services, it is import of services, and for import of services, RCM is applicable. Hence, you have to pay it, because that whatever consideration that you pay is going to be an A2 payment on which RCM is rightly applicable. And if you have missed to pay the RCM in the past, I told you the same, that it goes with the book entry. So if the book entry is there, then interest also is payable. If book entry is not there, we are going to make now only, then definitely that you can pay it. RCM self invoices to be uploaded anywhere, upload them anywhere. Expense is recorded, but invoice was not accounted, as we have only recorded under freight expenses GL without mentioning the vendor name. Then also, yes, see that you cannot record it once again. Hence, definitely that the record has already happened. So if you have missed the payment, then you have to pay it with interest now. So I think the chat box, whatever the queries are there, that I think that I have answered them. So I am moving on to the Q&A. The first is from Manoj Sunalkar. Is GST RCM is applicable if motor van service is taken on rent for transporting employees to and fro from workplace? There is a specific agreement with motor van owner, and all expenses related to motor van are incurred by the vehicle owner. Vehicle owner is unregistered dealer. Renting of motor vehicles is not one of the services which is identified for the reverse charge mechanism. Though he is an unregistered dealer from whom that you are receiving the supplies, but if his turnover is not exceeding the threshold limit, then if it is a forward charge mechanism, I don't think that there will be any implications for you. So I don't think that you need to pay anything. And Mohammed Abujar, I received an import invoice from Google Ireland for services received in India. My company GST number is mentioned on the invoice and they charge IGST on the invoice and mentioned that RCM is applicable on this invoice. How will I book this invoice and pay RCM and take ITC on this invoice? Value is 1300 rupees, including IGST charge. Okay, see, the thing is that what is the kind of a service from Google Ireland you must have received? Because now OADAR services, the government has brought in a new regulation wherein that they say that all these overseas suppliers are to identify their agent in India, and such an agent has to take a registration in India and should issue invoices on forward charge basis only. So if such is the case, then I don't think that this will be subjected to a reverse charge mechanism. Moreover, when he is mentioning that the invoice is subjected to RCM and all, and if he is not collecting upfront, because you are saying again that invoice value is 1300 including the IGST, so is he ready to accept only his consideration and not the GST, or that he is collecting the GST? You got to see, because definitely these people must have complied with the new regulation of taking a registration within India. So unless that is very clear, that we will not be able to give you a correct answer. But there is a confusion in the way that you have posed the query. So if you are still available, then you can give me the subsequent clarification so that I can answer you. But for the time being, if you are not there, for the benefit of the others, I am saying that OADAR services, that they should appoint a service provider in India as their representative and issue invoices on forward charge basis only. If it is not, definitely it is subject to RCM. Then Manoj had a question that we are registered manufacturers are getting job work from unregistered job worker. We are liable to pay GST under RCM? No. Again, it goes with the same way that I have explained, that if you are receiving any services from the URD, then URD purchases are currently services are not subject to GST. I am paying RCM pertaining to 1819. Can I take a ITC now? See, if the entry is in the books of accounts is happening now, then I have already answered this, that you can pay the RCM and no interest need to be paid, but definitely that you can take a ITC if it is eligible in your hands. Which government services under RCM? This is Mahesh's query. I think that I have given a detailed answer to you. Shyam Prasad is asking little clarity on the URD purchases and RCM liability. I told you for the services that they have not yet extended, but for the goods that 5,000 rupees is the limit. Are there new entries in 13 of 17 as 5A, 5AA, etc.? No, no such new additions were made. Again, ours is a rental business, renting for residential, hence no GST. We are not registered with GST also. Is RCM applicable to us when we are getting advocate bills, etc.? Yes, if you are receiving an advocate bill, that you are supposed to take a registration and pay RCM. We are registered manufacturers purchasing materials from unregistered dealer, whether we have to pay the GST under RCM. Again, it is the same answer, that 5,000 rupees per day is the limit. So if it is exceeding, definitely. I received a service from a consultant for 2.2 lakhs and he did not charge GST in the invoice as he is not registered under the GST. Any RCM liability for services, there is no URD services, there is no RCM applicability. Is RCM applicable if construction work is entrusted to an unregistered contractor and the value is more than 20 lakhs? See, if the value is more than 20 lakhs, it is the bounded responsibility that the unregistered person has to take a registration, no? So you should insist that you should have a registration, and then you have to, he needs to charge you. But otherwise, what happens? It is going to be a non-compliance by him, by which that tomorrow that the department may issue a garnishee notice against you by saying that whatever amount that you are supposed to pay to him, that the tax portion of it that you should pay to the department and balance only has to be paid to him. So such a kind of a proceedings will be there, unnecessary headache for you. So if you know pretty well that your service itself is going to be more than 20 lakhs, insist for him to take a registration. That will help him and you also to avoid future litigation. I think I have answered all the Q&As. Any more
Yeah,
questions?
I think, yeah, those have been answered. I think there's one question from Mr. Mohan.
Yeah. Do we
Yeah.
need to upload RCM invoices in the GSTR1? I think the GSTR1 doesn't require you to upload the RCM invoices. Any other questions from any other person, sir?
Audience, also, if there's anyone who would like to directly interact with Mr. Akela, I'll be able to enable that as well. So you just have to raise your hand or just give me a yes on chat. I'll be able to. Okay, there's Mr. Rajashekaran. Just a minute. Mr. Rajashekar, you can actually unmute and talk if you'd like to. I've given you the permissions to do so. Yeah. Mr. Rajashekar, we can't hear you.
A small correction. I think that the self-invoices are to be declared in the GSTR1 and as well as in 3B, because that you have to make a payment. So that is one correction that I stand corrected, that the self-invoices need to be declared in the GSTR1. We are organizing an event outside India, whether said expense incurred would be subject to GST under RCM. See, Karthik, this cannot be answered directly, because the problem is that what are the kind of expenses that you are incurring? If it is a kind of a sponsorship services that you are taking it, even in India, that they are subjected to RCM. But if you are incurring some travel expenditure, which you are paying it, then to whom are you paying will be the question. But if you are paying any kind of support services in relation to, we got to see the nature of expenditure, then only it can be commented on in detail. Out of the syllabus, Ramananda has commented it is out of syllabus. I do not know whether in relation to what. E-way bill is required for catering services. Yeah, see, e-way bill is required only when you are supplying something beyond the specified distance, that 50 kilometers if it is in Karnataka, and then if the value of the goods is exceeding 50,000 rupees and all that, and you are going to treat it as a supply in your hands, definitely e-way bill is required. Otherwise, not. Professional like CA, CMS, CS charge GST on their bill, but advocates are not required to GST registration. You are right. I belong to that category only. I'm an advocate and I don't have a GST registration. And because that I'm not supposed to charge the GST on forward charge. And my clients who receive my invoices are supposed to pay it under reverse charge mechanism. Hence, there is no mandate for an advocate to take a registration. But for other professionals like CA, CMES and CS, that they have to take a registration if their annual turnover exceeds the threshold limit, and then they have to charge it under forward charge. You are right. Vivekananda has a question. An equipment sent for repairs abroad by a channel partner and the same is received back after repairs. What are the GST implications? If we are giving service within warranty period where no service charges are chargeable within the warranty of declared period of 1 year or 2 years, and if the principal charges for servicing, what is the GST tax to be added in my bill after warranty? Sir, you are talking about sending the goods outside and then receiving it back. This is something to do with customs, has got no relevance with the GST. But however, that I can answer any questions under the indirect taxes. So if you are receiving any kind of a warranty services, and then under the warranty, if the goods are sent and then you are receiving back, and the invoice comes to you as zero invoice, but for customs purposes that you will be declaring a value to it, then definitely that there will be no custom duties payable by you, because there is no forex involved in the whole transaction. Hence, there is no further GST that you need to pay. But if the principal is going to charge you, say for example, the product is costing 1,000 rupees, you have exported, but after the services and all that, that he had charged you 100 rupees, but he will be declaring to the customs as 1,100 rupees as the price, saying that 1,000 rupees of free supply made earlier against the shipping bill, and then the same goods are coming back, but the service charges amount to 100. So net payable is going to be 100 rupees in foreign exchange. So in such a scenario, for the 100 rupees, it will be subjected to custom duties, because this is in relation to goods. Whatever service was rendered on such goods is already embedded in the goods, and the goods are crossing the customs frontiers of India. Hence, the transaction will be subjected to import duties, and then 100 rupees that you have to pay the BCD, IGST, and all applicable taxes. It is not a standalone GST transaction. But if he is not going to make any mention on the invoices, and simply the goods will go and then they will come back, but later he generates a service invoice on you for 100 rupees to be paid in foreign exchange. In such a scenario, then it is going to be import of service, and it is going to partake the color of A2 payment, on which that you have to pay the reverse charge mechanism. So there are two ways in which the transaction will happen. In the ideal course will be the first way, in which I told you that it should be in forming part of the customs valuation and should be subjected to custom duties only. But there are some practical scenarios wherein that the goods will be sent back as a return, repair return only, without any invoice, but the invoice will follow later. In such a scenarios, when you are making a native payment against such a service invoice, then RCM is going to be applicable. Vivekananda, I think that I have answered you.
Yeah. Sir, there's a few of them who wanted to interact, I think. I'll just allow them to
Yeah,
talk.
please, please.
Yeah. Mr. Karthik, you should be able to
There
unmute.
are some remarks in the chat box. RCM, while deducted, notice pay in full and final amount. See, RCM should not be deducted because this notice pay is not subject to GST, which has been clarified. And there is a CBIC circular also clarifying this position. So, no tax is applicable on the notice pay. Where we have to show the ITC of import of services under RCM in GSTR 3B. See, import of services you will not be showing, but you have to generate a self invoice against the import of services consideration, and such self invoice has to be uploaded in the GSTR1. Once you have uploaded, then the liability will reflect in the 3B, which you have to meet it in cash. That's how it should be done. Based on the manual DC, can we move the materials on returnable basis? Certainly. If the vendor supply materials in manual DC, can we accept the same? Absolutely. See, if it is a returnable basis, that if you are sending some material outside for undertaking repairs and all, that a manual delivery challan will do. That's not a problem. But the only thing is subjecting to the e-way bill rules, that 50 kilometer, 50,000 value, all those and all. If it is mandated that you have to raise a e-way bill, then in all such cases, based on your manual DC also, e-way bill can be generated. E-way bill doesn't require a formal invoice. E-way bill can be generated on any document which evidences the movement of the goods. Those who want to speak to me directly, you can unmute them. I'm attending this query from Karthik in the Q&A. Company in India has hired an agency outside India to organize an event on behalf of the company. Payment would be made in US dollars. Kindly clarify whether the invoice raised by the agency or the company in India would be subject to GST.
I think Mr. Karthik has also unmuted. That was most likely what he wanted to ask you, I believe, sir. Mr.
Yeah,
Karthik,
Karthik, you can go ahead. Can you explain me what is this event, where it is going to be organized?
Sir, we are going to organize somewhere in Africa, and
The event
that
is going to be held in Africa.
exactly, sir.
Okay.
And this will be done by the foreign agency only.
So company from Cambodia is going to organize an event in Africa. Let us see.
Exactly, sir.
You are
And
making
in
payment from India to them.
yes, sir. In
So
US
the
dollar, we will
question
be
is
paying.
that whether RCM is payable.
Exactly, sir. So whatever invoice he would be raising on me, so whether I
Yeah.
have to discharge RCM on that particular invoice.
See, unlike in the service tax regime, wherein that you have got the criteria, wherein that if it is a service which is rendered
Yeah.
in relation to a fixed place, then the location of the services will be treated as that fixed location.
Yes, sir.
But such a kind of a regulation is not there in the GST. Now you have to analyze section 13
Yeah.
of IGST Act, which
Yeah.
delineates the different scenarios for you that where that the performance of service is going to take place.
Yeah.
So if it is falling into one of such categories,
Yeah.
then accordingly that you have to go by that.
No, no, assuming, sir, I am taking as a place of service as the place where the event is getting performed.
No,
As
you
per section.
cannot. It should be coming out from the section 13. No.
Yeah.
Yeah.
Exactly, sir. So,
So
I'm going by this section 13, subsection exactly. Yeah, subsection 5, sir.
so 13 of 5.
Yeah.
What does it say?
The place of supply of services supplied by way of admission to an organization or a cultural event, education or entertainment or event or a celeb to such admission or organization shall be the place where the event is actually held.
But unfortunately, it is not so. No. See, when you are conducting this event in Africa,
Yes,
a
sir.
person who is living in Africa, when he wants to attend this, then for him it is applicable.
Okay.
Right. But for you, this particular section is not applicable.
Okay.
So that would not be the right selection for you. Place of
Okay.
supply of services, I think for you it will be another subsection that maybe that if you really need an opinion about it, maybe that we can discuss it offline, because that there are a couple of other questions which are also coming up. So I
Okay.
will take them. But if you can exactly touch upon, see, for you, what is important is somebody organizing an event in a place is what is the service. It is not that somebody who wants to attend such an event by taking an admission ticket. That is not your service.
Okay.
Because you are not buying a ticket there. You are organizing an event for which whatever expenses are there, you are bearing that. So it will not fall into that subsection what you are saying.
Okay.
Yeah. So you identify the correct subsection that we can discuss it. There is
Fine,
another
fine.
question which has come regarding construction of a building. Work is done by many contractors, but the contract amount individually is less than 20 lakhs, but combined together it is more than 20. See, where it comes to the picture is that it is not your responsibility to break your head that how much that each person's value is, whether he should take a registration. But you have to warn them that in case if your total turnover in a year, including the portion of money that you are giving as part of your contract, is exceeding 20 lakhs, then you should tell him that you better take a registration, because otherwise tomorrow, if the department comes to know, then they will soon on me and it will create a problem for you. So, Ramananda, what you need to tell that you need not be worried that your entire contract is more than 20 lakhs, but it is got distributed to several people. That each individual has to evaluate at his end what is his financial turnover in a particular year. If it is exceeding the threshold limit, he should take a registration and charge you on forward charge. So it is better that you take a undertaking from each of them that they are within the threshold limit, hence no GST is being charged. That would save you, at least to an extent, not fully. And Vivekananda had a question, conflicting orders by AAR, state level authorities for advance ruling have given conflicting rulings in various nature of goods which determine the tax slab they fall under. This is related to food items such as papad, fryums and other areas such as setting up of a solar power plant, intermediary services and so on. Sir, I agree to your views, but unfortunately that EIRs are not having any kind of a presidential value. So they are applicable only to the officer who had issued to that particular state and then to that particular client. So they are not universally applicable, but definitely it will create a problem for anybody who wants to undertake any kind of a business in that particular area, that whether he should follow the AIR of one particular state in difference to another state when the decisions differ. So that kind of a problem is there in the market. Yes, we agree, but unfortunately we have to live with that kind of a scenario. But it is best that whenever you are entering into those problematic areas, better take a wise counsel, then he will be able to guide you in the right way. That is the only course. But AIRs are not having any kind of a presidential value like a Supreme Court decision that you can quote and say, because that particular AIR has given a decision that I am following, because it is not binding on you. It is binding only the person who is the applicant and in the state, which state has given it to that officer. That's it. But to nobody else. Yeah. Any other persons who want to interact with me? RCM, while deduction of notice pay amount in full and final. I am repeating again, RCM, this notice pay is not subject to GST at all. So there is no question of any RCM on it. Please don't collect any tax or don't pay any tax on the notice pay because it is like a salary. So it is not subject to GST. Yeah, I can. Shyam wants to talk to me. Siddharth?
Yeah, sir, not just that. I think even Miss Lakshmi had raised her hand. So can I start off
Yeah,
with her?
please.
Yeah. Miss Lakshmi, you can actually unmute and you'll be able to talk now. Okay. Okay, no response yet. All right, anyway, we'll wait. You said Mr. Shyam, right?
Yeah, Shyam Prasad.
Just a minute. Yeah, I can see him. Okay, you should be able to talk now, Mr. Shyam. Yeah.
Yes, Shyam here. Happy evening, sir.
Yeah, thank you. Happy evening to you. Tell me, sir.
Sir, we have a parent company in US, and they have they own one platform which we in India, being their subsidiary, using it, and we have certain revenue also generated in India, and they are not charging anything to us, so we are not paying anything to them. Is it to be considered by department that deemed to be some revenue for payment to parent company and we have to pay some RCM on that? If yes, how we should determine and how much you should pay?
Sir, you only have answered your own question. The answer is yes,
Yes, sir.
because it is a related party transaction.
Correct, sir.
So the thing is that it is always better that you decide some consideration, because in a related party transaction, there is a provision under the law that whatever you declare, if the other person is able to take the full credit of it, then the declared value will be accepted as open market value. So if you declare 100 and then on 100, if you pay 18% of the tax and that entire 18% input credit you can avail, then in such a scenario, 100 will be accepted as a open market value. No questions asked. But I'll tell you, sir, the biggest problem is that when you are a MNC, that the parent company located outside India and there is a subsidiary which is operating in India, that you are also governed by the transfer pricing provisions under the income tax. So, if you touch upon those transfer pricing provisions and all, then a reasonable markup and all should be there while determining the value of the service. So, just for the sake of indirect taxes, that you don't take a position. My advice to you is that you should don the same hat before both the tax authorities, because for the sake of GST, because that you have to pay some tax and all in cash, then going in for a refund is a painful exercise. Hence, you may decide that some nominal amount that we will fix it, and then you pay. Then under direct taxes, you will be caught. So my humble submission to you is better do a transfer pricing study, and as per that, whatever value is correct, that you adopt the same, and on that only you discharge your GST liability also under RCM. So that you will be compliant with both direct taxes as well as indirect taxes. Nobody can question you in future.
Thank
Your
you, sir.
company's interest can be protected in this way, in the best way.
Thank you, sir.
Right, sir. Most welcome. Yeah, the others, if there are any.
Okay, audience, any further questions? I think, yeah, Miss Lakshmi, I think you can talk now, right?
Yeah, ma'am.
Okay, she's unmuted, but I don't think she's able to talk.
Lakshmi, ma'am, you are unmuted.
Okay. There must be some issue, I'm guessing. All right, okay. Okay, Miss Lakshmi, we are not able to hear you, ma'am. I know you are mentioning I'm speaking, but we're not able to hear you. There might be a mic issue, I think. Would you be able to type if not? Okay, all right. Okay. In the meantime, if there's anyone else who would like to interact, I think we have almost crossed the time limit, obviously. So we're going to, yeah. So I know we can go on for another half an hour, but we must unfortunately close it in about 5 minutes.
Because that these participants are slowly disappearing.
Yeah, yeah. Okay, there's one question from Mr. Vivekananda. I'll just allow it to talk. Mr. Vivekananda, I think you'll be able to talk now. Yeah. You can just unmute and.
Yeah, I think that he had typed a question which I'm answering it now. National Anti-Profiteering Authority was set up in December 2017 to ensure that GST rate reductions are passed on by firms to consumers, and there was no profiteering. But right from the outset, the process of imposing penalties on companies was criticized for the alleged lack of proper methodology to ascertain profiteering. As of May, there are close to 400 cases pending with it. Yeah, this is a news, sir. So we can't do anything about it. We all know it, but we can't do anything, sir.
Okay. There is no any kind of grievance cell or something like that, ombudsman kind of, where it can be.
If you are a victim, then you have a right.
Okay.
But if you are somebody who is reading in the newspaper that such a thing is happening, that you have to be empathize or sympathize. But beyond that, you don't have any legal right to enforce.
Okay.
Legal right comes only when you are part of the system.
Okay.
Yeah, right.
Very nice. Thank you so much. Thanks.
Right, sir. And Lakshmi has raised a query. We are paying membership charges to airline associations in foreign currency. So, what for that you are paying this airline associations membership fee, that you are receiving some services. So, when you are making a native payment to them, then RCM is applicable. Rajasekhar, Periyanan and Karthik are there. Raised their hands. I do not know whether they are there and they want to talk. Mr. Karthik and Rajshekhar Periyannan.
Sir, I've just forgot to remove them. They've already finished.
Yeah,
Yeah,
okay.
Rajshekhar, I don't think he was able to talk, but yeah.
Okay. Any
Yeah.
others?
Yeah, audience, another 2 minutes before we wrap up. Anyone else? Okay. All right. I think we can call
Mr.
it a day.
Karthik is there, but is he interested in
No,
raising
miss.
any further questions?
Yeah, any other
That
questions,
we
Mr.
have-
Karthik?
Yeah.
Okay. All right. He's
Okay.
mentioned no on chat.
Yeah.
Right. Okay. So I think on that note, we can call it a day, sir.
Yes, I think it's good to see that at least 50% of the participants who are there still
Yeah.
till the end.
Correct.
Are we getting any certificate? Yeah, definitely that appreciation is there from our side, sir.
Yeah.
But
Well,
nothing in writing.
yeah,
But if you have
unfortunately,
taken any kind of a points from the session which are going to help you, definitely that will be the most happiest persons because that is what is that we are looking at. That this is a repeat session, in fact, but I never expected that there will be so many people who will be interested in this particular topic with so many queries and all. It's good to interact with you all at the beginning of the year on this occasion also. And thank you that good to see these many people. And I would love to see in the future sessions also your active participation. And as I said in the past also, that we look forward for your suggestions on what topics that you would like to
oh, yes,
hear
yes,
in future. If you
yes.
can give us some topics, certainly that we will be able to cover. But going forward, that we are contemplating whether to cover only the GST updates, either from the CBIC, GSTN, or the GST Council and the important case laws which are going to be relevant for your operations. But it will become what normally that you can see the webinars in the outside world. But we don't want it to be concentrating on one particular topic. But definitely that what we look forward is that if you can suggest any topics of your interest, then definitely we will be more than happy to spend the time usefully on those topics. So please give your advices also, which will we will act on them as per our convenience. And the next session in February will be definitely covering the budget. So let us hope that it is going to be interesting for us and would be relevant. Thank you on this note that I take your leave. Thank you very much once again.
Thank you so much for your time and efforts, Mr. Akela, sir. I look forward to seeing you on our next session, next webinar. And audience, as I mentioned, we will share the post-webinar mailer. You will have Mr. Akela's contact that is on mail, and the webinar recording followed by the presentation. Both of them will be shared. And as Mr. Akela mentioned, I think if you are all able to respond back to our mail by just mentioning what topic you would like to hear from us in the February's webinar, that would be great. So we would be able to work on that accordingly. Based on the majority, we will be able to select a specific topic. So on that note, I will also sign off for the day. Thank you all and have a wonderful weekend. Thank you all.